So far, it looks like we've, for the most part, have been kind of fortunate. It was pretty scary last night with a heavy wind. This is Matthew Kruse with CommStock Investments. We are still in the process of kind of doing a full assessment of some of the potential crop damage from the derecho that came in through our area last night. It looks like some of the primary areas that were hit, you're actually in kind of the eastern area of South Dakota, southwest corner of Minnesota, and parts of northern Iowa, northwest Iowa. We're about right here where my farm is, so we were just kind of on the edge of it, but we got clipped a little bit. Most of the winds were there between 75 and 90 miles per hour. There were reports of wind up to 130 miles per hour in some areas. We're hearing a lot of reports of property damage, things like that. I talked to someone this morning that said a lot of their shades and their feedlots were ripped off, but not a lot of crop damage to speak of. I think that's what the market is kind of digesting for the moment. You can see it doesn't really care. So right now, or market's down 4, so it hasn't really responded to it. But we're still kind of talking to different customers and trying to get a feel for what's out there. But this was a picture of my farm this morning, and you can see there's a little bit of lodging around the edge of the farm. I think there's a little bit out in the middle, but nothing too extreme or yield limiting at this point. We haven't found any cases yet where the stalk was snapped, or no extreme cases like we saw in 2020 where the whole field got flattened like a pancake, stuff like that. But you're going to see some minor wind damage like this. I don't know that it's going to amount to a whole lot. Might create a little bit more challenge at harvest time trying to pick up that off the ground maybe, but if it leans over more. But so far it looks like we've, for the most part, have been kind of fortunate. It was pretty scary last night with the heavy winds, but it's still early. It's mid-morning here on Tuesday when I'm recording this, and so that we haven't gotten around to anyone, so there's still potential areas that got hurt even more. But at least in who I've talked to in kind of northwest Iowa and kind of the southeast corner of near Sioux Falls area in South Dakota are saying that they're not seeing much damage yet from the derecho. So we'll see. We're doing kind of our weekly forecast outlook for this week. I think a lot of the focus is going to be shift from the heat that we're kind of in right at the moment, basically through this weekend to early Tuesday. We've, for the most part, in a lot of areas, we've been into the low 90-degree temperatures, but now the forecast is a complete shift where we're going to see below average temperatures for the next 6 days. And I think that's probably what the market is focused on for the most part. Is yes, we did go through a little bit of a stress period here, but it's been pretty short-lived, and we got plenty of rains to get us through it as well. And so now we're shifting where a lot of these temperatures in Iowa are 3 degrees below average, some areas of 4 to almost 5 in this part of Nebraska, 4 degrees below average in this large area of western Nebraska, southeast Iowa. And so that's what the market is focused on. Now, this is kind of the forecast out through August 10th. And so at least to start out August, it's going to be, unusually cooler, I suppose, for this time period. And pretty good ideal conditions to kind of wrap up the pollination period. And I think in the state of Iowa, we're already 2/3 complete with pollination. But, longer term forecast does show a return to heat later in the month of August. And so, but this is what the market is focused on for right now. Looking at rainfall just through next Sunday, pretty solid rainfall through, pretty much most of Iowa and Illinois sees an inch or more. Those I states, Nebraska, South Dakota gets quite a bit. We actually didn't get much rain in that derecho. I was told that we only got about 3/10 last night. And then this morning, after 8 a.m., we got a half an inch. So we actually got more rain the next morning following the derecho than during the derecho. But there's areas here that are probably going to get too much. 4 inches on fairly saturated soil here in southeast Iowa, I think is probably too much. And so that might be detrimental there. Looking out to next week or the week following, second week of August, we're still seeing most of it shifting more towards the eastern part of the Corn Belt. Still this eastern half of Iowa is getting wet, kind of this Central Plains area, but all of Illinois, Indiana, Michigan, Kentucky, a little bit of Indiana that's getting covered pretty well. And so those areas, especially in Indiana, probably need it and welcome it. Certainly in Michigan, I know is running a little bit dry in this western Michigan area. But the point is, there's still large areas that are getting rainfall, and so I think the market is still looking, at a favorable weather forecast for the first half of August. And that's kind of the point here. The challenge to the market is, we arguably have 3 more critical growing weeks to our growing season, and at least the next 2 here are showing very favorable conditions. This just gives you a different picture of kind of the weather anomaly in the next 2 weeks, and kind of showing all the green and blue areas where we're getting above average. And so you can see it basically covers the majority of the Corn Belt, I guess you'd say, from the east to the west. This is a little bit longer term forecast gets us through the end of the month, basically, to kind of wrap up the bulk of the growing season. And it's maybe not quite as accurate, but it does kind of show that for the most part, most areas are going to do pretty well. There's no major problematic areas. Last week I was showing a lot of dryness here in Kansas, and now that's gone away. And so it's actually gotten better since last week. And that's kind of been a pattern that we've seen throughout this growing season, where we see dryness in the forecast, at least in the Western Corn Belt. And then, we get to that moment in time, 2 weeks later, 3 weeks later, and it didn't happen yet. But then we still see, okay, now another 3 weeks from now, it is going to happen. And so we keep thinking it's going to happen. And when we get to that point in time, it just doesn't materialize. And it's kind of showing the same thing right now, that there's no major weather threats that we can see. Now, that doesn't mean every area is perfect. We understand that. I point out here that there are parts this is the precipitation ranking for just the month of July, which is probably a more critical weather month as we go through most of the bulk of the pollination period in the Corn Belt. You can see here, yes, there's a pocket here in northern Indiana that ran drier. I wouldn't say extreme drought. Probably the toughest area, just looking in July, was this southwest part of Michigan here, or western Michigan, that had leaned heavily drier, I would say. But it looks like they're getting some more rains there. It should help it out. But you can see here, there's a lot of green here, much wetter than normal, especially in this northern tier of Iowa, which this is where the bulk of the corn is grown. I mean, you can find corn anywhere, of course, but the majority of it is grown here in this northern 2/3 of the state. So in general, well above average for the month of July. The one thing I want to talk about is our grain exports, and talk about corn and beans. And trade deals, I think, are ongoing right now, and that's also what we look for to be a potential catalyst to kind of get us out of this bear market that we're in this channel trading lower, and we're down another 3 to 4 cents right now this morning. And I think the big kahuna, as I'd call it, is the trade deal with China. And that's really what we're looking for, that the market is looking for, to maybe get us out of this problem with languishing prices right now. But just to give you a perspective of how important is China to corn industry. And there have been some years where they've been pretty important, right? In the 21-22 season, our corn exports to China made up about 30%. 30% of our corn in that season went to China. And of course, that was our biggest export year. Just to put it in perspective, what the USDA has us projected right now is not quite, but almost on par in total with that 21-22 season, just coming in under 2.7 billion bushels. Now, that's certainly possible. I think everyone would agree that our exports are performing above average, probably better than most people think. And the fact that we're doing it without China, I think, is impressive. But to do what the USDA is asking, hasn't really been done before. Our biggest year, if you go back to the 18-19, when China didn't buy much, the rest of the world bought 2.5 billion bushels from us. And now we're saying without China, they're going to buy 2.6, almost 2.7 billion bushels. It's possible, but what I'm saying is, the case of corn, China would help, but it doesn't matter quite as much. Now, it's a little bit different case in the soybeans, as you might have guessed, that we've relied pretty heavily on China, as you can see in the last decade, where on average they bought, roughly 1 billion bushels from us each year. The least amount they bought from us, it was in the 19-20 season, where it was less than 500 million bushels. They've purchased as much as 1.3 billion bushels in the 21-22 season. And so they have us pegged here at this 1.6, 1.7 billion bushels here. This is where USDA says they have us estimated at for this next 25-26 season. Now that becomes a little bit more untenable, because you can see how there's a much bigger red area here that we have to replace with the rest of the world. And the most that the rest of the world has ever bought from us was in this 19-20 season, where they bought about 1.26 billion bushels. That's the most the rest of the world has ever bought with us, without excluding China. And so the point I'm trying to make is that China has been such a big buyer of soybeans that there really isn't any replacement for them. And so in the future, I see that unless we get a deal done with China, the USDA is going to have to lower their forecast for exports. And because there's as much as, we're talking about 400, maybe 500 million bushels that the USDA could potentially have to reduce that if we don't get this trade deal done with China. And that's how important it is. And so if our last July WASDE report had soybean ending stocks at 310 million, well, if you add potentially 400 to 500 million bushels on top of that, you're getting close to 800 million bushels in ending stocks. And a lot of people would say, oh, that's way too high, it won't happen. But it was back in 2018, I think it was, when we had ending stocks at 900 million bushels. So it hasn't happened before. It's not unprecedented. I would say it's rare, but it has happened before. And as you can guess, in that year, soybean prices dropped to about $8 a bushel. And so I'm not necessarily predicting that. I'm just saying that there's potential for that to happen. And I don't see, in the case of corn, I think we're doing a good job at replacing China as a buyer, but I don't see how we can replace China with all of our soybean exports. Ideally, we'd like to do it with more domestic demand with renewable biodiesel. If we could replace them that way, it'd be great. But that also seems like it's a long way off from happening. But I just don't see it happening. And so that's why the tariff deal with China is so important, if we can get that done. Otherwise, I think the USDA is going to have to revise our export forecast lower. One final thing to talk about is prices are struggling right now. The USDA is estimating that total farm sector debt has now hit a new record. I think we're talking like $560 billion here. This is where we're at right here, $560 billion plus dollars, and as that's happening, it's not surprising, just because obviously with the prices the way they are, they're underwater right now. I read the other day that really adjusted for inflation, the prices we're at now are really more like $3.30 corn going back just 10 years ago. And so our prices are, when you look at them in terms of inflation, are much worse than they actually are. And so we need something to happen. I don't know if it's going to happen anytime soon. And so we're going through a difficult challenge. There's been some reports about private equity getting interested and more involved in some of the operating lending going on in farming, which also makes me concerned, because anytime when an industry is going through any challenges, a lot of times what's hovering or what is to following that, or the private equity groups looking to kind of come in and pick things up on the cheap. And so this Carlyle group is one group that came to my attention recently that announced that they're starting to take large stakes in farm operating loans across the Midwest. And so it's kind of concerning. Now, some of those, they're probably not your traditional farm loans. They're probably a little bit more flexible, but they tend to come to a little bit higher cost and a little bit higher interest rates, which is, tack that on to already high cost of production. It makes things real difficult. So that's all I have for you right now. Please subscribe to the CommStock Report. We have a lot more trade information and sales idea. You can sign up for a free trial right now on this QR code. Thank you and have a good day.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.